Hey everyone, welcome back to the Mark Loeffler Experience. We got our good friend and friend of the show, Andrew Hines, back, and we're going to be talking about second quarter market predictions. What's going to happen? What do we think is going to happen based on all of our intellect and forbearing and whatever else, other big words I could add in here, but I won't. And yeah, welcome back, Andrew. Good to have you, buddy.
Yeah, thanks for having me, Mark.
Nice tan.
Yeah, slowly working on it in between hanging out with the baby. There's not a whole lot of time for sun, but get a little bit.
Fair enough. I mean, I hear this is like the perfect Florida time.
March is like unbelievably awesome, and then April starts to get a little too hot, but I'll take too hot over too cold any day.
It's still -1 here. I'm just putting that out there. I mean, in case you want to feel bad for us poor people in Ontario.
Yeah, it's like 30 degrees here.
Yeah, exactly. 80
too hot.
Ugh.
Yeah.
All right. So, I mean, obviously we've had a hell of a first quarter, right? So we'll just do a quick recap. A hell of a first quarter, first 2 months, it was a rocket ship. It's been stupid everywhere. Inventory was low, lots of buyers. Interest rates were still stupid low. I guess because of Omicron, they were going to jump, the overnight rate in January and didn't. They held off till March. Inflation is massive. March, we kind of slowed down a little bit, at least in Ontario. Like Western provinces are still, going great guns. But Ontario, we did. And because we saw that first rate hike on the overnight. And then we also saw like a 50% rise in the fixed rates.
Like you said, like the inflation thing's still happening. The market's been doing the same thing it was doing before. Things were crazy. Like I'm just looking at Toronto's average days on market right now, and it's still under 10 or around 10, depending on the number of bedrooms you're talking for detached houses. I had a lot of conversations with realtors as that was all happening. The rate hike happened, and then sort of the conflict overseas, and gas prices went up, and it had some people pausing to reflect. But I don't think that it did much more than that. So I think it created an opportunity for sure for buyers. But in terms of, did it really change the course of our upward trajectory in property values? I don't think so. And we'll get it more into predictions as we go. But
Wow.
Yeah, crazy to say the least, 100%. But on the rate hike front, I really do think it was more of a symbolic rate hike than anything, because we both know our inflation number is quite a ways up here, and their quarter point overnight rate jack up isn't going to do too much in the grand scheme.
That's our recap. Let's talk about what's going to happen in this quarter. We have 2 rate hike times. One's April 13th, and the other one's in June. They're talking about maybe a half point increase on both of those. And this really affects you if you have a variable rate mortgage, which I do on everything. And I mean, that could be big, right? Like 1% increase.
Yeah. And that was one of the things that I started to think about. I started renewing into fixed when we were kind of seeing this horizon happening. I'm like, okay, reasonably rates are going to have to go up at some point. But we've been saying that for years. But I mean, yeah, it's tough to say what's going to happen now, because you can look back to the 80s and what happened there when inflation sort of ran away. And that's kind of like the last time inflation ran away the way it's run away now. They ended up jacking rates up into the high teens, which is kind of unfathomable today to think that would happen again.
You're looking at economics. Anytime there's over $100 barrel oil, there's a recession. In the US, we've had an inverted yield curve, which is the long-term rates have gone under the short-term rates, which is another trigger for a recession. They're raising rates there as well, which again, you're basically putting a plug to slow the drain, which again, limits growth, which would then get you a recession.
Right. Yeah. It's kind of, it's mixing the ingredients, and there's so many factors to consider. And that's why, like, so many times when we've had these discussions, I'm like, let's just think about the ingredients that go in here and what they have to consider, because the government's taken on so much new debt, which now has to be serviced. And that works really great at low interest rates, but they raise the interest rates. Now they got to pay for that. And then we've got the average family that's buying at these rock bottom rates. When they go into renewal, if we're up a few points, like, a lot of people probably aren't in a position to handle that increase.
I mean, they are still qualifying at
the benchmark rate. Yeah.
Like 5 whatever percent. And I mean,
right.
I don't think we're seeing 5 whatever the benchmark rate for a long time, right? Like, I mean, we were just talking about this. Like, rates are right now 3.5 to 3.9. If I told you you're going to get a 3.5 to 3.9% mortgage 3 years ago, you actually probably would have
Pretty
been
normal.
quite happy.
Yeah. Yeah, it was pretty normal. Yeah, I mean, and I agree. I think that it's just the idea with a rate increase is the bank is sort of trying to control inflation. And that's why I called it symbolic, because our inflation is way too out of whack for that really to do much. They're in the rock and the hard place scenario where they need to raise them more, but it would be sort of devastating from a tax perspective and from a homebuyer affordability perspective, and renewers, like people who already have homes.
Well, I mean, when we talked about this a bit, and I think one of the reasons why we've seen long-term bond or like fixed bond rates go up, which again affects fixed rate mortgages, is they're slowing down the money supply, right?
Yeah, because the Canadian government, they admitted, right? I think it was a Pierre Poilievre he was questioning somebody, I forget who, and they were admitting that they were basically buying up Canadian bonds and then selling them back for less. So the government, and basically the taxpayer was paying the difference. They were trying to drive up the value of the bonds so that our interest rates would stay down.
Yeah, they were,
and so they've sort of stopped doing that, right?
They just took the page out of the US, right? It's what the US did in 08, 09. Just in this crisis, they just did it a lot quicker.
Yeah, they called it quantitative easing, right? But it's really market manipulation is what they should call it.
It's basically flooding the market with cheap money,
which is a great short-term band-aid, but it comes around, right? So the question is, when does it come back around here, and how does it come around? I was gonna say my prediction, if we're talking Q2, is we continue to see that inflation number rise. The whole term stagflation, when you have inflation that's going up, but you don't have economic growth, I think that that's a very real possibility. Not to be like a bummer about that, but I think that we just need to kind of look at that and say, well, is there an opportunity in that from as an investor? I think that there could be some opportunities coming, but that's obviously a discussion we can have.
Well, I mean, here's the thing, like it's interesting times. Like I'm following the inflation thing, and I mean, there are grocery stores talking about a 30% increase in prices across the board for everything that they're going to have, right? Because of gas prices, commodity prices are through the roof. I mean, a 2x4 is back to what, $12 again. It was up there last year, came back down. It's just stupid volatile right now.
Yeah, I mean, well, that's what happens when you can just flood the market with cash, right? And that's what we've seen, right? Too many dollars chasing too few goods. Man, that's why it's like you think back to the days where they had gold-backed currency and you couldn't just print unlimited dollars. My, those would be cool days to have again. You don't love that, eh, Mark?
No, I don't like that idea. I think inflation's a good thing over time.
Well, that's always what we were taught, right? I mean, I studied economics. They said inflation's a good thing. We always target between 1% and 3%. If we're being honest about it, of course, but
we all knew it was 4 to 5.
There's a guy that calculates it the way they used to calculate it in the 80s, and I'd have to find it. I forget the name, but we're tracking somewhat similar to the levels of back what it was calculated back then. It just depends on what you want to include, right? Like obviously, if we're building a basket of goods that includes used cars, grocery store, food, and real estate, I mean, our inflation's like 30%. So it's really just what are you looking at?
Yeah. What do you think that the Bank of Canada is going to do? Do you think we're going to get a double rate hike in April? So 50?
Well, now that they've done the one, I'd say they at least go another quarter. So they did a quarter. I'd say they at least do another quarter. They kind of threatened with the half. So I feel like they kind of test the reaction to that, and then they'll do another symbolic increase. We'll probably see more of those based on what they're doing, but not big ones, but little ones in the meantime.
I think we do see half a percent.
Very possible. It's just trying to predict what other people will do, right? Like we've kind of.
Well, I mean, here's the thing with Bank of Canada
economics thing, right?
Bank of Canada has been very, very good at saying, "Hey, this is what we're going to do," and then they do it. So they're putting out the word, and the market is pricing in, because that's what the market doesn't like when something happens that they don't know about. The market doesn't care if ever they say, okay, it's going to be half a point, half a point, half a point, and then they do half a point. They care if they say, oh, it's half a point, half a point, half a point, and then it's a quarter point. They're like, oh, that's good for us. Boom, things go up. Oh, it's 3/4. Oh, that's bad. Right. So, I mean, that's kind of what happened in March. Everyone was expecting half a point, and we got a quarter.
Yeah, true. And of course they can blame it on Omicron or whatever.
I think that was the Russian thing.
The Russians. Yeah, sure. Okay. Yeah. So There's always something though, right? And I remember like having been in the mortgage business since 2010. I just remember it was always okay, rates are going to be going up, getting the emails, and then oh, okay, well, no, this this happened or this happened. I mean, at the end of the day, ability to increase rates, as we've said, we don't want to be in a recession. No one wants that on an official level. Like, so we want to keep growing. That's the Bank of Canada's mandate. So do they want to push us into a recession by continual rate hikes? It's tough to say. Rock in a hard place again. So I mean, like you said, I think it's very likely that they do the half point. Like they are saying they're going to do it. But then I've also seen just as often, if not more, where they say they're going to do something and then they're like, actually, we've decided to cool it on that for now.
Fair
so
enough.
It might just delay it a bit.
Yeah. Okay. What do you think fixed rates are going to do?
That depends on what a lot of people do, but yeah, I'd say they keep going up a little bit at a time as well. So you kind of see them creep into the fours and then maybe sit there for a while.
I think most of the quantitative easing is off.
Yeah.
I think they pulled the rug on that. Like they stopped buying new bonds in October, and I think they've stopped turning them over now.
Yeah.
I kind of think we're going to hold around here for now, like the 3.7-ish range. We might get into the fours, but I think a lot of it, I think we've seen the big traumatic jump. So I think we're going to kind of level off. Now,
that'd be kind of cool for an investor purpose.
Well, and I mean, that's the whole thing is, okay, what are we going to do over the next 3 to 6 to 12 months in order to beat the system?
Yeah, I agree. It's all about looking at that and what can we do as an investor. Like, do you think it's at all possible? And it's probably a very small chance, but we do see a correction in the next year where values actually go down. Like we see enough of a change in the market where we actually get many months of inventory and there's actually an opportunity to buy discount real estate.
We're already off the highs for the year, at least in the ITSO boards that I track, like Halton Hamilton, Kitchener, Peterborough, a couple other ones. In Ontario, we're off the highs.
Okay.
Obviously, you didn't see my video from yesterday.
I missed it.
That's okay. You were busy. Children, Florida. I get it.
Yeah.
But yeah, we're off our highs, right? And like all of the board, there was 15,000 listings. There was 8,500 sold. So we were down 10% in listings, down 24% in sales year over year. Like we've already started seeing it. But
like
yeah,
cool down.
It cooled down, but it did this last year too. Whereas it ran into March last year and then it started to trickle off. It did this in 2017 as well, where we saw the run up into April and then we saw the dip and it came back down to like, I don't know, December numbers. And then to be honest with you, it was flat and then it started climbing.
Yeah. Like I'm just looking at the Toronto's home prices and, you know, we peaked in October, then back down to a sort of a trough in January and then back up to another peak in mid-February. And then we're headed trending down again. It's still that yo-yo on an escalator thing, right? It's still going up overall, but I mean like a meaningful, do we see a correction? You know, could we see a 25% correction? Is that something that you could see, not necessarily this coming quarter, but maybe even this year?
I mean, a 25% correction in most markets in Ontario takes us back to December.
That's the crazy thing, right? It's almost
so we'd be flat year over year.
Yeah.
And I don't see that.
Don't see it. Yeah.
If we ended up at like a 10 to 15% year over year from December, I wouldn't be shocked.
Right. And I always come back to this, and I know we've talked about it, is like, you can't change the ingredients here. Like we still have huge immigration and a bit of a bottleneck with production of new housing. That's not changing anytime soon. And then we've got supply chain challenges, which could restrict our new construction ability. So when you factor all that in, it's like, if there is a correction, how long could it really last? You know, that's why I think it's more of the volatility more so than a like a permanent correction or a more permanent.
Here's the thing. Like if you raise interest rates high enough, that fixes the demand side of real estate because less people can afford it.
Absolutely. It does to a certain degree, right? It's not going to change anything for the cash buyers. They're still going to be able to come in, but I do agree. 100%. Yeah, it's going to create a big drop in demand.
I think there's a couple factors in play that obviously rising interest rates. We saw, another country invade another country, which spiked oil prices. So there's a whole bunch of stuff in play that people are just like, ooh, what's going to happen next? And I don't know, like I'm watching videos on, Warren Buffett, he's buying companies left, right, and center right now. I'm like, oh, if he's buying companies, I should be buying everything I can.
Watch him and Nancy Pelosi, right?
Yeah, Nancy Pelosi.
You heard that? There was a YouTube or a Twitter page. It was a Nancy Pelosi stock tracker.
I haven't seen that one. I got to follow that one.
I think it got shut down because it was just following all her trades, and then I guess that was bad press. So
oh well, I mean, now that Elon owns Twitter, maybe he'll get that back up.
Yeah, get that back up and running. Yeah, that's a different discussion. We'll save that for another day.
Yeah, for sure. I mean, what are you doing in the second quarter that knowing all this information?
It's been such a roller coaster ride over the last couple of years, and I paused for a while and said, wait and see. That really wasn't a great move. So I've been a lot more aggressive lately. I'm just looking at markets where the numbers work now. And I think that's sticking true to the fundamentals I've always stuck with. Cape Coral, Florida is where I'm focused right now, signing new building contracts, looking up new lots to buy. Really been getting set up while I'm down here, putting the push on there. And then, of course, we've got the campground back home that's opening up this spring. So for me, it's time to be aggressive in markets that the numbers work now. So if the cash flow works now, in a recession, it should work still, have the ability to pivot. So I've kind of got like a plan A Airbnb strategy with plan Bs, like, regular rentals. People are flocking to Florida right now, just like you're kind of targeting Alberta as an opportunity market. I see this as an opportunity market. And I think that in times like this, we really got to focus on those.
Yeah, for sure. And that's the thing. Find opportunities, buy cash flow, have multiple plans, execute that.
Yeah. And just like where you can see the numbers work, jump on those opportunities. Of course, you got to set up systems and infrastructure. And I know you've had to spend a lot of time in Alberta, but I mean, you get to go skiing and stuff. So that's okay. That's really what it comes down to. Be willing to go, do your research, build your teams, but that's what you got to do. I do see a lot of people sticking to Ontario and just trying to make it work. But a lot of markets in Ontario, it's just harder to make that cash flow number work right now.
I think they're just counting on the lift in rents. And I think they're counting on more the fact that, again, we're not building enough rental units. There's going to be a heck of a lot of people moving in here. Less people are going to buy a home, which means there's going to be more renters. Therefore, rents are going to go up.
That's the thing I like to think about. Like, if you do see a 25% drop or a 50% correction, it doesn't mean people don't need a place to live. It just means how they live is going to be different. So maybe they, multiple families living under one roof, or maybe you have a couple of people that are renting when they would have bought, obviously more than a couple. So I think about that down here. I think about certainly relative price points, something we've talked about a lot, where we know that it's cheaper in certain markets to rent to begin with. So odds are those aren't going to go down as much as the really expensive markets, right? If people lose their jobs, they're going to go find cheaper places to rent. And, if you kind of think about the what would people do if, you can kind of reason your way through what you're going to do and how you're going to invest to position yourself to handle any correction that might come your way.
Well, so is that your prediction? Do you think there's a correction coming?
It's so hard to say, trying to predict. It's predicting people. That's the real hard part, right? Because if economic fundamentals were being followed all this time, the QE, the quantitative easing wouldn't have really been a thing. We would have, we wouldn't have put Band-Aids on things. We would have fixed them back when they were evidently a problem. So it's hard to know when there's all that kind of thing going on. So that's why we'll come on here and predict. But at the end of the day, we're gonna say, yeah, still just practice fundamentals. What else can you do?
I don't see a huge drop off. Like, that's just not what I see. I see some leveling out. And again,
sure.
I mean, if we're talking Canadian real estate, and that's what I hate about Canadian real estate, is that it's so different, right? Like, Alberta is on fire. BC, Victoria is doing very well. Vancouver's a little slower. But obviously Ontario, which is driving a lot of the headlines, well, yeah, like their prices are down. There's inventory again. I mean, I think that's going to continue, but I honestly think that we're going to see maybe flatten to small declines.
That makes sense. Yeah, certainly, like from where we are right now and be a little lower towards the end of the year, I could definitely see that.
Wow. I think we flatten to the summer. And I think September, we start seeing it pop back up again.
Yeah. And keep in mind, all we're really seeing is the difference of when there were 20 to 30 offers on a house, and now there's only 2 to 3. So still incredibly a seller's market, but less of a seller's market, and that's the correction in price.
Yeah, and we definitely are off of highs.
Yeah, right? Exactly, right, because the highs were there
in 90% of Ontario markets.
Mm-hmm. Yeah, it totally makes sense, and that's why. I'm not saying I predict a big correction. Of course, there's a correction coming at some point in time. When is that? And we'll see little micro corrections and volatility all throughout, even probably this year. They're not necessarily long lasting. Like I said, just looking at a chart of the last year, there's been two, fairly substantial drops in average pricing in Toronto alone, and then right back up.
Yeah, then right back up. All right. Anything you want to add before we jump off?
Were you looking for a more firm correction or a more firm prediction?
No, I wanted you to argue with me a little bit more,
Okay.
but whatever.
Yeah,
We
argue
agree
with you.
too much. That's the problem.
I wish that it was easier to make a strong prediction, but when is it ever? So Mark, I'll say we're going to go a quarter point interest rates increase. You'll say a half, and we'll see who's right next time we do this.
All right. We'll bet a vegan cauliflower steak.
Oh, no way. Those are terrible. You got to do better than that.
Oh, I mean, we can have A5 Wagyu.
Yeah, no. I mean, like something else, but we'll talk about that.
Okay, sounds good. All right, man. So for everybody, if you don't know, you should all go follow Andrew and look up his podcast on Apple, Spotify, and YouTube. We'll put links down below. And obviously, he has on Instagram as well. Thanks so much again, Andrew. We certainly appreciate your time, taking your time away from your family and bathing out in the sun in sunny Florida there. And we'll have to catch up when you get home, bud. Thanks again.
Sounds good. Thanks, Mark.